In this video we are going to talk about 10 dividend ETFs. So before starting, please like this video and subscribe to this channel for our future updates. If you're a long-term dividend investor, these are 10 of the finest dividend ETFs to buy and hold. Several focus on dividends exclusively, while others own dividend stocks as a part of their strategy. These dividend ETFs are diversified by geography, style, size, sector, and more. They can be owned individually or as a group, depending on your risk tolerance and investing horizon. Number 10. WisdomTree US Small Cap Dividend Fund. Small cap dividend stocks aren't the most popular way to earn money, but they're not ineffective. On the other hand, the WisdomTree US Small Cap Dividend Fund, DA, $31.05, tracks the performance of the WisdomTree US Small Cap Dividend Index. Only 13% of the portfolio's weight is held by the top 10 holdings, which include tobacco and real estate holding businesses Vector Group, VGR, and branded food products maker BNG Foods, BGS. While financial companies make up 26% of the fund, industrials, real estate, and materials make up 18%, 10%, and 9%, respectively. The fund's holdings are worth an average of $1.8 billion, with some worth tens of millions of dollars. But it's WisdomTree's use of dividend weighting, rather than just assigning portfolio value based on business size, that makes DA so appealing. The weighting of each stock is determined by dividing its regular dividends by the total dividends of the index. If two firms have identical market valuations, the one paying out more dividends is given a higher weighting and hence has a greater impact on the performance. If you're 100% devoted to dividend investing, WisdomTree's strategy is intriguing for all equities, small and large. Number 9. Vanguard FTSE Developed Markets ETF. Another dividend ETF with worldwide exposure is the Vanguard FTSE Developed Markets ETF, VEA, $52.70. This fund is designed to track the FTSE Developed All-Cap Excess Index. To put it another way, VEA owns around 4,048 equity positions, with the top 10 accounting for roughly 10% of total net assets. Despite the fact that the prospectus claims it invests in all sizes, it is a foreign large-cap mix fund. Small-cap stocks make up about 3/4 of the portfolio, while large-cap stocks account for just 3.6%. Nestle, NSRGY, and ASML holdings are among the top holdings. ASML. The fund's 2.4% yield is higher than similarly structured as dividend ETFs. While Europe accounts for 54% of VEA's assets, Japan accounts for 20.6%. Only the UK has a double-digit position, 13% of assets. Number 8. Schwab Fundamental Emerging Markets Large Company Index ETF. Many in the asset management industry thought emerging markets would rebound in 2020 before the coronavirus hit. Sadly, that didn't happen. In 2020, the Schwab Fundamental Emerging Markets Large Company Index ETF, FEND, $32.53, returned -2.8%. FEND is up 15.8% thus far in 2021, above both its benchmark index and category by 1,285 and 1,025 basis points. The Russell RAFI Emerging Markets Large Company Index is tracked by the ETF. The index chooses large-cap stocks based on adjusted sales, retained operating cash flow, and dividends plus share repurchases. FEND presently has 370 holdings, with the top 10 accounting for 24% of the fund's assets. TSM, HNHPF, and Industrial and Commercial Bank of China are three examples. ITBUY. It is heavily weighted in China, 25%, and Taiwan, 18%, as are many other emerging market funds. It's also heavily concentrated on financials and energy, which account for 47% of assets. These 10 dividend ETFs have a 2.3% yield, which is roughly double the current S&P 500 yield. Number 7. Nuveen ESG Midcap Value ETF. It offers more than 50 years of socially responsible and ESG, environmental, social, and governance, investing experience to mid-cap stocks, which many consider the sweet spot of equities. They have sorted out their business strategies and are expanding faster than their large-cap peers, while still being stable enough to endure the occasional downturn. Add to it the premise that value stocks may return to investor favor over time, and you've got a primetime ETF. To find mid-cap value equities that meet ESG standards, NUM tracks the TIAAS USA Mid-Cap Value Index. The fund has 87 jobs now. The top 3 sectors are financials, 21%, industrials, 16%, and real estate, 15%. The fund's top 10 holdings account for around 20% of the ETF's total net assets. Number 6. JP Morgan BetaBuilders Canada ETF. Diversification is vital across sizes, sectors, and borders. Even if you only care about dividends. If you don't, you're susceptible to home country bias and over-reliance on US equities. It's gotten more common as US stocks outperform most other developed markets. Of course, don't go overboard. A balanced portfolio should always include some US holdings. The United States still has the world's largest market capitalization. Also consider overseas funds like the JP Morgan BetaBuilders Canada ETF, BA, $64.81. BA began in mid-2018 by tracking the Morningstar Canada Target Market Exposure Index. This product has 85% exposure to Canada's market capitalization. The ETF now holds 84 Canadian equities worth $44.5 billion. Number 5. iShares Russell 1000 Growth ETF. The iShares Russell 1000 Growth ETF, UF, $288.27, is not a dividend fund per SE, but it's included in this list of dividend ETFs since it provides both growth and income. The UF is one of the top 15 largest ETFs by AUM. It tracks the Russell 1000 Growth Index, a subset of the Russell 1000, which includes 1,000 of the biggest US companies. Simply put, they are companies predicted to develop faster than the market. Tech equities dominate UF's 496 holdings, accounting for approximately 45% of total assets. It also weights consumer discretionary and telecom companies at 10% each, with healthcare at 9%. Other sectors, such as consumer staples, have weightings below 5%. This outperformance of the Russell 1000 value and blended Russell 1000 ETFs is due to UF's weight. Over the last decade, UF has returned 19.7% yearly, compared to 16.7% for the iShares Russell 1000 ETF, IB, and 13.3% for value stocks. Number 4. Invesco FTSE RAFI S1000 ETF. Like a few other funds on this list, the Invesco FTSE RAFI S1000 ETF, PRF, $161.10, uses dividends as a measure of quality. It tracks the FTSE RAFI S1000 index, which ranks the largest US corporations based on revenue, cash flow, dividends paid, and book value. The ETF typically contains roughly 1,000 stocks from the FTSE USA All-Cap Index, which includes 1,763 large, mid, and small-cap stocks. These stocks are ranked and scored based on those 4 basic parameters. Companies with the highest scores are included. This occurs once a year in March. Number 3. FlexShares Quality Dividend ETF. The FlexShares Quality Dividend Index Fund, QDF, $57.59, attempts to invest in firms with sustainable yields. A company's underlying financial strength must be sufficient to sustain attractive dividends over time. Here comes the quality factor. To track the Northern Trust Quality Dividend Index, QDF uses a group of high-quality U.S. equities chosen for their predicted dividend payments and fundamental variables like profit margins, managerial experience, and cash flow production. This dividend ETF currently invests in large-cap stocks, 71%, mid-cap stocks, 22%, small-cap stocks, 7%, and cash, 7%. Value bent, 43%, mixed, 37%, and just 20% growth. Number 2. Fidelity MSCI Real Estate ETF. Since the global financial crisis, low interest rates and a moderate pace of real estate development have benefited REITs. This has resulted in increasing rent, solid occupancy rates, and rising property values for landlords. COVID-19 slowed some industries. Lockdowns and voluntary closures hit retail and office real estate hard. But the slowdown was brief, as the real estate market exploded in 2021. Real estate is represented by the Fidelity MSCI Real Estate Index ETF, FREL, $31.75. In 2020, the fund lost ground, returning only 4.9%. But FREL was one of the greatest dividend ETFs in 2021. It has returned 27% year-to-date, compared to 18.7% for the S&P 500. Number 1. Vanguard Dividend Appreciation ETF. VIG, $160.18, tracks the S&P's Dividend Growers Index, a group of stocks that have increased dividends annually for at least 10 years. In the third quarter of 2021, the index will replace the Nasdaq's Dividend Achievers Select Index. The S&P index has an annual exclusion criterion that eliminates the top 25% of eligible companies. To avoid excessive inventory turnover, S&P will also eliminate the top 15% of dividend yields from the index. Finally, no stock may exceed 4% of the index. While the ETF appears to be changing, Vanguard is really making changes to better meet its dividend indexing goals. What do you think about our video? Please let us know in the comments area below. If you enjoyed this video and would want to hear from me again, please subscribe and turn on the notification before leaving.